The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the October 21st magnificent Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is truly what it's all about. So let's go look at one of our tools. This is the tool I call Beautiful Thoughts. Build a beautiful soul. Question: is beauty a necessity in your life, or should it be? I believe the answer is yes, and I believe that beauty isn't only pleasant to the eye, it's the essence that helps us live a more productive and happy life. You see, beauty starts with recognizing, seeing, and feeling all of the beauty that surrounds us. For beauty, it is inherent within yours and mine. It is inherent within our soul, folks, and beautiful thoughts will build a beautiful soul. Think about it like this. What is it that makes the difference between a tiny ant, a small little tiny ant, and that small grain of sand that the ant uses to build a little mound of dirt around its home? Have you ever watched an ant build its home? Absolutely beautiful. It is a beautiful thing. Your life is beautiful. The surroundings that you have are beautiful through your own unique creative ideas. If you pause but for just one moment and look around, you will see that there is always something beautiful to be found right here, right now, and right in front of your eyes if you will only look. Marcus Aurelius Antonius Augustus, Caesar, as his friend knew him, was a great philosopher. He was quoted once as saying, "Such are thy habitual thoughts, such also will be the character of thy soul, for the soul is dyed by thy thoughts." My meaning for this? Concentrate your thoughts on the good, the beautiful, and the positive, because beautiful thoughts do build beautiful souls. Hope everybody out there had a fantastic weekend. Great to be back with you. Let's go check out the beauty of these markets right now. Dow futures up about 12 points, trading out at 15,328. S&P futures up 2 1/4, trading at 1738. Nasdaq futures up 10.5 points at 3352. Russell 2000 up a couple of points. King dollar up 9 cents right now, trading out at 79.82. Relatively quiet in the currency market, but we'll take a look at the currency pairs. Goldilocks up about $3 right now, trading at 13.17. Silver on the move. High-ho silver up 1 7/10% right now. That's up 36 cents, trading out at 22.28. Light sweet crude at 99.96, down 86 pennies, getting awfully close, I believe, to the top of the consolidation box out there. So we'll certainly take a look at the black oil out there. Natural gas back about 2 cents right now, trading out at 3.74. We've got around the globe here over in Europe, you've got the FTSE up 10 points, the DAX down 6, so flat markets out there. Nikkei up 132 points last night, up nearly 1 full percentage point. Hang Seng up 98 points, that's about just under 0.5%. And the Shanghai, that was up 1 6/10%, up 37 points. Our call-in number is 877-927-6648. If you give us a call, be happy to take a look at your stock chart. So, where do we begin? Well, let's start off in the currency world. Let's go in the upper left-hand corner of my screen. If you are watching us on TigerTV, you can see all the different charts that each of the contributors place on there, that we're taking a look at. If you're listening on the radio or your mobile device at TFNN.mobi, thank you so much for doing that. Remember, you can catch the archive of this show on Channel 9 or watch the live stream by going to the homepage of TFNN.com. In the upper right-hand corner, you'll see a box, 3 little smartphones. Click on that. This show will stream live to you. We're going to first start off by taking a look at my favorite currency pair and yours, the euro, Japanese yen. Right now, trade out at 134.12. 134.12 is the 0.786 retracement of its most recent, big baby bar, big wide price spread bar on September the 19th, the top of which is 134.93, all the way down to the low that was put in. I won't say it's all the way down. It was just a normal retracement, but down to the low that was put in on October 8th, down at the 131.12. If you go from the high to the low, your 0.786 retracement, we know that's one of the next levels here inside of a retracement area, the Fibonacci retracement series, 134.12 out there. And we don't really see any bearish. We don't see any back-to-back bearish signals out here in the marketplace. What does that say? Well, number one, it says 100% move of a move. That would take us up into the 134.93 level. That would be normal. Take a little bit of a rest. So here's one potential resting spot. If, in fact, we see the euro, Japanese yen go ahead and power through this area here, then we'll see it go take on that move of a move, 134.93, and then more likely actually move up and complete the 1.618 larger butterfly pattern that is in place out at the 135.64 area. That would be a level where you would expect to see the market then just kind of cool off. Of course, as I take a look at the overbought, oversold range out here of that 14-period RSI, it's not exactly over. It's not overbought. It's certainly not oversold by any stretch of the imagination, but it's not overbought, so it's got some room to run. We want to be paying attention to this because this is the fuel source of the markets out here, this currency pair. So we'll be paying attention to that. If we take a look at, speaking of currency pairs, what the heck, let's take a look at the Great British Pound out here. Now, did form, this is a daily chart that we're looking at, big wide-ranging bar on October the 17th. Little doji out here. This doji is a important resistance level, so you want to watch the Great British Pound, U.S. dollar. That was also taking place at a resistance level created by this little shooting star candle here on October 1st. So the high of October 1st, really important because we can see here that the market, as it gets up to these levels, as resistance shows signs of being tired. Right now you've got some leaves falling off of the tree, but boy, you get a close. First, if you get a close above the doji candle, that is very bullish with regard to this currency pair. That level 1.6224. Of course, you always need to look to the left-hand side of the chart to see if there's any other kind of pockets of resistance out there, and there is, which is that shooting star candle from October the 1st. So 1.625. If we see the Great British Pound, U.S. dollar get above that level, it's going to have clear sailing, not only to get up to the 163 area, but it could decide to go ahead and complete its work, which it wants to do up in about the 1.65-ish range. So we'll be paying attention to the daily chart here right now. Just says caution, Will Robinson, but that's all that it is saying at the moment. That was on the Great British Pound, U.S. dollar. If we go take a look at silver out here, Hi-ho silver, that is trading up, as I mentioned, about 1.7% here this morning. So silver trying to get some real legs behind it. Now, silver inside the rising price channel, as we mentioned on Friday, during Friday's show, we saw silver come back after it had slightly broken through that little correction sub-channel that it was in, came back, tested the bottom of it, which it did, and now it's all set to head up to the top of that, to the rising price channel out here. Where will that take us to in silver? Well, let's just take a look at A to B equals CD patterns that are out here. Your 1-to-1 takes you to about 26.50. Looks to me like that is where silver wants to head to. Right now it's trading out at 22.29. Let's go take a look and see what else we've got inside this chart here. Oh, we got Goldilocks for sure. Goldilocks not doing a whole lot here this morning, but what a session it had 2 days ago. Wide-ranging bars here, just taking a little bit of a rest. That's all that gold is doing. It's going to come back and it's going to test the top of its, or I should say the bottom of the rising price channel that it broke out of. Where does that take gold to? Well, if we just take a look at A to B equals CD patterns out here, where that takes gold to, and so far a big move off of that C point. The 1585-ish range is where gold should be headed to complete a 1-to-1 A to B equals CD pattern. Let's see what else. I've got two other things. We got the VIX index here. If we take a look at the VIX, you can see that was below the 50-day exponential moving average. That's that blue squiggly line going across my screen out here. Now, the VIX, when it is below the 50-day, that is extremely bullish out here. I'll put something. I don't trade Bollinger Bands, but maybe many of you do out there. If I just take a look at a Bollinger Band, give me a moment here. I can put this on my screen. I was just taking a look at it earlier. I've got the 50. I've got that out here. 50 period. Give me a second here. I'm going to get rid of the other 50-day exponential moving average out here on my screen. No, I don't have the right thing. So I'm just kind of doing a little bit of work. I probably should have done this before the show, but we're just going to do it right here. So we're going to change the multiplier to 1. We're going to go to 50-day moving average. We'll put the exponential out there. And so if we do take a look at this, there's one bit of caution out here. We can see that if you were to trade Bollinger Bands, the VIX here has gotten really stretched. But as we take a look back at this, now, it'll trade inside this band here. So we could see a bit of a snapback in the VIX. But as I pull this thing back further, and take a look at these Bollinger Bands. They work pretty darn good here, at identifying areas where it gets a little bit too stretched, needs to come back inside the range. Of course, we didn't really see that happen too much back here in the 2011 time frame, but I want to take it to more current time periods out here. Let's come back to the last time that we had our politicians. I'm going to try to come back to the January era. In January here, when January 2nd, when we saw a big move in the markets here, we saw the VIX kind of get below the bottom portion of these Bollinger Bands. I just bring it up just for the heck of it, like I say, I don't trade these Bollinger Bands, but I do make myself aware when things get a little bit stretched to one extreme or the other. Price tends to come back into normal behavior patterns out there, but well below the 50-day exponential moving average. That's really all that we need to know here. That is in very bullish territory. So that is on the VIX index. We do take a look at the S&P futures, and we'll go take a look at the daily, the weekly charts out here. Right now we can see that this is really the strongest of the price channels that are out there inside the futures contract. So we really want to be paying attention to the S&P futures traveling in a very nice rising price channel. Any pullback that we see in the market should be stopped at the bottom of that price channel. Now, what you can use out here, this price channel is best working by starting here. I'll give you the points so you can go ahead and reference them on your chart out here. I would use the close. This is a half-an-hour chart, by the way, that we're looking at, a 30-minute chart. Use the close at 1 p.m. on October 9th. That's at 16:45.25. Use that as your first touch point. Use as your next touch point the open at 7:30 in the evening on October 15th. That is at 1691.75. That'll catch the rest of the co-located opens or closes out there to give you a real nice channel line that has held. The biggest test that we saw, that came in here at 9:30 in the morning on October 17th. That was on Thursday. Otherwise, this price channel here holding very, very, very well. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Futures up 22 points right now. And what I have on my screen here, I've got the weekly chart for the NASDAQ futures. You know, if you're listening to the show last week, certainly Friday was going through and taking a look at the weekly charts. I don't recall if we took a look at the weekly chart of the futures contract. I think we pretty much were just focused in on the indexes and maybe the ETFs out there. And one of the things that I mentioned, you know, it's really not my opinion of what the market is doing. I'm just reading what the message of the markets is and try to use a set of tools. I do use a set of tools out there that allows me to objectively just take a look at what the chart is telling me. And that's really what is great about technical analysis, and why I encourage each of you on a daily basis to learn something and grow. We're always learning and growing here. There's always more to be able to take in. And as we take a look at this weekly chart here, this is, you know, I did mention that we're in of all the legs, we've had 5 legs up since the March 2009 lows. And when I take a look at the charts, I take a look at an objective tool that I have out here that I use, that I've created. It tells me we're in the strongest leg right now, which is pretty amazing. Now, if we just simply utilize candlesticks as one of our tools to help us to understand strength out here, What I want you to pay attention to, hopefully you're watching this on Tiger TV. Again, if you're just listening on the radio, your mobile device, thank you. But go catch the archive of this show and fast forward it to this segment. If you take a look at last week's wide-ranging bar out here, wide-ranging bars tell you a ton. And markets do not end on wide-ranging bars like that. What do I mean? I mean, look, a market can move sideways. You got plenty of reasons, a few divergences out here, a number of reasons for a market that could move sideways, pull back a bit. But markets do not end on wide-ranging bars. If you take a look at the weekly chart out here and you try to find another wide-ranging bar like that, you could come back and you could find the bar. I'd say you have to come all the way back to the time period here of January of 2011, the week of January 1st, 2011. You can see wide-ranging bar there, moved a bit higher and then moved sideways before it pulled back and went ahead and tested the bottom of the price channel line out there. Markets don't move sideways, but that was a wide-ranging bar that we had. We try to find another wide-ranging bar like last week's out there. You could come here and you would take a look at October the 14th, the weekend at October 14th. Again, another wide-ranging bar similar to what we saw. Then we saw a market just kind of drift higher a bit for about a 3-week period of time before it moved back and retrace back to the bottom of the price channel. I'm not suggesting that it's going to come back and move to the bottom of the price channel here, but I am saying we do need to pay attention. It is important to go take a look at the charts out here. Now, when I put last week's bar together with the prior week's, and it looks like a hammer, it's not a hammer candle. Yeah, it qualifies more as a doji than anything else out here. The reason why it's not a hammer candle is because we hadn't seen a retracement. We hadn't seen a move lower. It takes on the shape and looks like, I'll blow it up on my screen, looks like a hammer candle. But it wasn't out here. That's the week ended October 11th. But when you take a look at that wick here, we can see the extreme emotions, created in the market, whether by what doesn't really matter what the reason was. What you want to take a look at that long lower shadow out here. You put these two candles together, it just shows you the strength inside of the Nasdaq futures out here. The market's not going to go down with the Nasdaq behaving like this. So where's the Nasdaq is likely to head to? Well, it's likely to head up to the top of its rising price channel out here before we see any meaningful pullback. Look, can the market move sideways and pull back here? Yes, but when you put these two bars in perspective as to where the markets are here, what you ought to be looking for is long positions, not short positions. Of course, that's Stevie's call out here based on what the market is giving us as we take a look at the weekly bars inside of the Nasdaq futures. If we go take a look at the S&L. Let's actually go take the Nasdaq futures here and let's put this on a daily chart. Might as well spend a little time picking this apart. And as we take a here's the daily pattern inside the Nasdaq futures. Now, if we take a look at the shorter A to B equals CD up in this, we would come off of the swing point low on August 27th. That's at a price level of 30.50, 250. Go all the way up to the B point on this, which is the October 2nd high, 32.51. We take a look at that retracement, and that retracement, it looks like a fairly normal retracement. Let's go measure it from our A to our B point. We'll see it got down to the 0.618 retracement level. Intraday, it had pushed just slightly below that. The 0.618 was 31.28. Take a look at this explosive move off the C point. Yes, we've passed the 1-to-1, and it's now headed to 33.63, which is the 1 to 1.272. Markets do not end on moves like this off of a C point. This, folks, is majorly explosive. Majorly explosive. That is inside the Nasdaq futures. By the way, inside the Nasdaq futures here right now, let's see, we got Apple. We're going to take a look at Apple because it's trading out at 512. It's going to take on that 515 area. May, in fact, try to break out here today. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow down 11 points, trading out of 15,386. S&P up 90 cents at 1745. Composite up 14 points at 39.28. Russell 2000 up 1.5. Apple up $8, up and over the old resistance level. If it closes up above, we'll call it 515. It'll be confirming that it is breaking out, and it will be headed on its way up to the 582-ish mark out there. That's your 0.618 retracement off of that all-time high out there in the 705 level, down to low of 385. And some change back on the trading session of April the 19th. So it looks like Apple is going to be moving higher. That'll put some energy. We had Google breakout. It's trading above $1,000 now, so it's trading at 10.17. It's up $6 and change out there. To the upside today, you've got Netflix. That's up $14 and change. That's up, and that's the leader in the clubhouse, up 4% here this morning. VF Corp, that's up 8%. I'm sorry, up $8, up about 4%. Mentioned Apple, Google, VoxelJet, VJET. That's up 20% this morning. I think that was an IPO from Friday. Solar City, that's up 7% here this morning. SAP, that's up about 5%. Checkpoint Software, CHKP, that's up a nice 6%. Devon Energy, DVN, that's up 4%. Hasbro's up 7%. A lot of nice dollar moves out here. To the downside, Tesla Motor, that's down $2. Not a big deal. Crown Castle International, they're off about $2. China Mobile, CHL, that's off $1.70. McDonald's out with numbers before the bell. They're trading down about 1 7/10% here. That is off about $1.60, $1.70. Amazon down $1.88. No real big numbers to the downside out here. The sexiest stock, Tesla, is the leader in the clubhouse dollar wise to the downside. So not a real big deal out there. If you watch this on TigerTV right now, we're looking at the McDonald's chart out here. The B point of an A to B equals CD, which is tacking today. That is the August 20. This is the weekly chart actually that we're looking at. Let me go switch down to a daily. Well, we'll go to the daily chart here momentarily. So the weekly chart that it's taking on, August 23rd is the swing point high, 513.74. That's got 59 million shares out there. But quite frankly, as we take a look at Apple here, that retracement here off of the B2C was about a 50% retracement. And if we see some pretty big movement, if we see some volume come in here, I'd say not only is the 0.618 level, which is about 580-ish range, you'll see the 1-to-1 A to B equals CD 572.21. But, we could see a move up into the 600 range inside of Apple. One thing at a time. Let's go take a look at the daily chart. Let's slip down to the daily chart, but you're seeing a nice breakout here. Let's take a look at a swing point that it's going to have to take out, which is August 19th. Now, only 18 million shares. Only 18 million. Let me pull this back a bit far. Yeah, how about that? So only 18 million shares on a daily basis. So if this is a break, it'll have no problem doing more than 18 million shares. And look, we're not the only ones paying attention to the potential breakout above that consolidation level out here. That price again, 513.74. Give me a moment here. Let's put the lines on this because we're certainly going to be paying attention to this during the day. And certainly tomorrow we'll come back and see if this confirmed the A to B equals CD up. So far, only been trading here for about 8 minutes. Let's take a look at the volume behind the move. So 1.6 million shares. So 1.6 million shares. It's going to take on 18. It's going to have the volume today. If it's got the price, meaning close about 513.74, it will be breaking out. That'll be very bullish for the Qs. That'll take pricing in that first level, 571.69, but it really wants higher price than that, in my opinion, if we see a breakout here, and that is in Apple. Let's go back as long as I'm in these core areas here. Boy, let's take a look at Google. You have seen the lows here for Google for a while. Google has this pattern here on earnings dates, either to the upside or the downside, as marking its high or low. Now, what Google has done in one trading session, it was traveling in a consolidation zone out here, the lows of which were about 840 up to the highs of maybe about 920. So what does that make it? A 680 point consolidation range. Geez, it gapped up in one day and took out that entire consolidation zone out here. It's getting into that extreme over bought level. So, we should see a bit of maybe a move sideways to a pullback out here. But this stock chart looks incredibly strong. Look at the volume behind the move here on Friday. You had almost 12 million shares at $1,000 a share or so on average. Pretty darn nice out there. When you take a look at that gap up in that bar, really the just to give you a feel for just how powerful that is. That's why, we're all so visual. I'll go ahead and draw it in here. We are all visual, and that's what you really need to be able to do with the gaps out here. I'll change the color to green. Try to do that. That's probably that kind of a green style. Let's see. Close enough. That is truly the range of the bar out here. That's how wide of a bar that we had inside Google with that move on Friday out here. I don't know that it's really ever had that kind of a move upside or downside at its highs out here. That is incredibly impressive inside of Google. So that's anyways, that's we are visual, so it's always good to be able to put that out into a stock chart when you are trading it. Don't be afraid necessarily of gaps. Gaps can absolutely be your friend out there. We take a look at IBM out here. Let's go take a look at this. Right now you've got the Dow struggling a bit. It's down 25 points. McDonald's not helping out for sure this morning. But if we take a look at IBM, let's go look at the weekly chart now. We know that it broke through that consolidation, which is a 30-point consolidation level. So it should at some point in time try to get back and test that level and confirm that it is a real breakout, not a false breakout on the weekly chart out here. And I've got it noted on my screen. It's why you want to always be paying attention to where the volume bars are. And interestingly enough, on the weekly chart, if you go to August 12th, 2011, what you will see is 57 million shares, the high of which is 172.61. Interestingly enough, the low that we saw last week inside of IBM, it got down to 172.57, closed back above that, and on lighter volume. 45 million shares. Now, coming down certainly with some volume here, but what was stopping it in place appears to be all the way back in August 12, 2011 out there at the 172.61-ish area, and that is on IBM. So we'll be paying attention to that as well. Let's see what else we have here. ExxonMobil, let's just take a look at all these charts that I've got inside here, this little tab here. If we take a look at ExxonMobil, that's been traveling in this nice 7-point consolidation range. It has rejected the lows out here in the $85 level. Now, what it has done, let's take a look at the retracements that it has made thus far, meaning taking a look at the September 18th high, down to the low that was put in on October the 10th. And we can see that it's made the 0.618 retracement level. So it's a normal spot for ExxonMobil to travel sideways, maybe pull back a bit. If it were to pull back, it could pull back as well to the 0.618 level, where it would then form an A to B equals CD up. Let's take a look at that. So the pullback here inside of ExxonMobil, that could take it to 86.69, maybe 85.96 out there. If, in fact, that's what takes place, it really sets up a buying opportunity inside of ExxonMobil, or maybe the DIG, something like that. So it could pull back to a 0.618 retracement. That would take it up then and form an A to B equals CD pattern to the upside, taking into the 89-ish level, maybe 90, where it would take on its next swing point high, which is September 18th. That level's 89.87 out here. But what we know about ExxonMobil, it's rejected the consolidation lows, and that says that it'll go try to visit the consolidation highs, eventually get up into that $93 area. So that's what it looks like ExxonMobil is headed to over the longer period of time out here. That's on the daily chart. Let's go take a look at J.P. Morgan. Out there just simply printing money and giving it to the federales out here. J.P. Morgan, though, this has now closed its window out here, so I'm going to go ahead and get rid of this black diagonal line going across my screen. That was a resistance area. It is now up and through that resistance area. That was set by taking a look at the low of August 14th, $54. That's really where your window was. A gap down on August 15th, the high of which was $53.68. 17 million shares came up there through a wide-ranging bar with 24 million shares on October 16th. I was telling you, if you were short, to be careful out here. Even though you were coming into resistance, you were coming in there with volume. So now what we've seen here, just a little bit of a move sideways. That is a resting bar. And there's a little confusion bar here, this little high wave candle from Friday out there. Of course, the confusion was, well, what was the penalty going to be? And, let's just write a check for $13 billion. That shouldn't be any difficult task out here. So where is J.P. Morgan headed to next? Well, if we just take a look at retracement levels, we'll go back. We'll put those back on the screen. 0.786 is the likely target. That says J.P. Morgan wants to go visit the 55.46 range. More likely, we'll go ahead because it's a larger consolidation pattern that's been traveling in. Will likely go visit the 56.93 range, and that is on J.P. Morgan. The financials looking PDG, pretty darn good out there. Now let's take a look here at Microsoft's chart. Let's go see what Microsoft is doing right now. It is priced out at 35.01. It's running right into a resistance area, so it'll be important for us to watch Microsoft, see what it is doing. Had a big gap down on July 19th out there with 248 million shares. So here is a window, has not been repaired yet. But should we see a close above the low of that session from July 18th, that price level is 35.22 out there. We know we're not going to get the volume of 49 million shares, so all we want to find out is whether or not the resistance area is going to hold as resistance, or Is that level going to be fixed? And are we going to and what's a resistance level? Now, here's how we would take a look at that resistance line. Old resistance, I really should go back to the J.P. Morgan chart out there, because old resistance should become new support. So that little gap up, that little broken window out there, broken with regard to resistance, but we would go take a look at that and use that as a support level. So right now what Microsoft is trying to do, and you want to pay attention to it, is get above or close above 35.22 out there. We'll see if it's the little engine that can. So far, intra-session today, it's been up to 35.20 out here. So a stock chart that we most certainly want to be keeping our eyes on. Intel, let's take a look at Intel, see what it is doing. Intel is trying to form an A to B equals CD up. It's taking on its B point. The B point is the swing from September 19th. That high is 24.08. 28 million shares as prices come into that area with 28 million shares. That was on Thursday. Friday, 29 million shares out here. So it's coming into that swing point. What Intel wants to do is go ahead and complete an A to, wants to confirm an A to B equals CD, which would be a close above 24.08. It's got the volume. It's pushing into that swing point high with volume. Should be able to do that. That'll take Intel, not ExxonMobil, will take Intel most likely up into about the 25.10-ish, 25.26-ish range. Of course, there is a bit of a gap down, so it also has a resistance level that has not been tested. That is set up by the June 19th low, $25 even Steven. So 25 to 25.26 or so is where Intel should head to if it can clear its swing point. And it's given us every indication that it, well, let me take that back up a bit further. There is a resistance line that I just now am taking a look at. That is the gap down from July 17th, and that had 77 million shares. So, okay, so that does have some resistance out here. But you know what? If it can close that window, this is Intel, if it can close that window, we'll put a black line across the screen out here. If it can close that window, meaning close above 24.04, and then do it with more than 28 million shares and get above 24.08, that'll still confirm an A to B equals CD up. That'll set up your Gartley sell pattern in that $25.10-ish range out there. So that is on Intel. Let's go take a look at the commodity sector out here. Let's go look at gold. Well, we looked at gold and silver before the bell. Let's go take a look at light sweet crude. Light sweet crude here now moving down the low so far. Intra-session, 99.45. It wants to test that thick black line going across my screen. That is a consolidation level that we saw light sweet crude break out of. If it closes back inside the lower part of that, then all of this will have been a false break topside. And that says that you would see light sweet crude move all the way down to the $85 mark. Otherwise, if in fact light sweet crude holds this $99-ish area, right now we can see that it's a 200-day exponential moving average that is also acting as a support area. Then what we would see is we would see at least a move higher back to the top of the swing point out here from August 28th. So light sweet crude over the next several trading sessions will be important to watch how it travels towards into that $99 area where it gets down below it. It can test it, but when you see it close below, we'll call it 90. Let's give it a number out here to be paying attention to. Let's use the last swing point up into that consolidation, which was June 19th. 99.01 is the number for us to be paying attention to. That is on light sweet crude. If it can bust through that, certainly 95.78 to 0.618 retracement level would be the number. If we take a look at the 30-year Treasury bond out here, you had a little doji candle on Friday as it's coming into resistance. So that has to make us say, something to think about, because the resistance area here is its longer-term consolidation. Take a look at that consolidation zone out here. So price is headed back. That consolidation area, the bottom of which is in the 135 range. You did have a little doji out there coming into resistance. Does make you say, makes me say, something to think about. Right now we've got the Dow off 17. S&P is flat. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest. At Hertz Global, as a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Lead the charge. The upside here is Netflix this morning. So let's go take a look at this stock chart. What a rocket ship this has been off of its lows. Talk about getting the getting the stuff knocked out of it here. This thing went from a high. It's at its all-time highs, or just slightly below it right now. Went from July of 2011, where it made a high of 304.79, and then a huge cascade as they changed their business model out here. Now that's a important resistance zone, because this is a monthly chart that we're looking at. So big old bearish engulfing candle with follow through on that very next session. The bearish engulfing candle taking place on a monthly basis on the month of August of 2011. That should have been a resistance level we saw here last month, the month of September. Now it's up above that swing point with lighter volume. Back in July of 2011, there were 102 million shares traded hands here. This time around, as this month of September passed that resistance zone, did it with 55 million shares here. We've done about 53 million shares thus far in the month. But support here for Netflix should be 304.79. If it closes back below that, and we've seen a false break topside on lighter volume here. So the area to be paying attention to on the monthly chart here for Netflix is going to be 304.79. Let's just size this thing down a bit here. Let's take a look at a weekly time frame for Netflix. Let's see what we can find here of any interest to us. Let me go ahead and get rid of this area here, this line. We can see that the looks like I've got the 10-week, I've got the Death Cross and the Golden Cross only converted to a weekly chart out here. That's the 10 and the 40 to make up for the 50-day and 200-day exponential moving average. We see got the Golden Cross back in January of 2013 out there. So you can see so that's one thing that we notice on here. If we take a look at the July 15th swing point high, that had 27 million shares. As it has gotten above that, it's done it with 16 million. Last week was only 19 million, so it's up above on the weekly with some lighter volume. We got to use that same real area here, a little bear sash candle, so that level of 304.79, very important to monitor inside of Netflix to determine whether or not this is a real breakout. Now, what Netflix did do as it broke above that level, it came back and it's tested it 1, 2, 3, 4 times, really. So it's testing that area out here, so that's very important because the work has been done as far as testing the downside of a breakout here as we take a look at Netflix. So another high-flying stock on the daily chart should have gapped up this morning. Let's go check that out here. Netflix, so let me get rid of this. There we go. All right, so, yeah, we have a small little gap here. We can see 2 other gaps. This is not a 3-gap play. It looks like the first gap percentage and dollar-wise is probably going to be that first gap out here. So that does not qualify. This morning here, gapping up above a little bearish engulfing candle from the day of October 3rd, and that was 334.50, had 3.5 million shares, so it's taking on that level with volume this morning, 1.3 million shares in only 27 minutes of trading, so not looking too bad out there. So that's what's going on in the markets here, folks. If you're short, be careful. Have some stops in place here. These are strong bars when we take a look at those weekly charts out there. And I could give you a list, which I did to my subscribers this morning, 6 reasons why we ought to see the market move down. And that's important. Because if we don't, folks, there's another reason that this little engine that could is a little engine that would and will go to higher price. Take care if you're off to start your day, folks. Have a great Monday. Otherwise, I look forward to seeing you in just a few minutes. Thanks. We'll be right back. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.